right, everyone. Hello. Welcome to today's webinar, 3 Techniques to Help You Capture Trades of a Lifetime. My name is Jerry D'Ambrosio. Happy to be here with you folks today. Before I get started, just want to do a quick sound check and video check. There we go. Arthur says loud and clear. Awesome. If Arthur can hear me, I think everybody can. If you guys don't mind, there we go. Edward says okay. Just use that chat box. Just kind of chime in there, make sure everybody can hear me okay. We got a pretty packed room here today, so that's fantastic. Glad you guys could take time out of your day, right? Noon here on the East Coast, 9 o'clock on the West, about 5 or 6 in the UK, which I know we have a lot of subscribers who join us for our weekly coaching sessions. Do join us from that part of the world. So welcome everybody. Again, my name is Jerry D'Ambrosio. Great to have you here for today's webinar. Again, it's great to see a lot of friendly names of people who come to our weekly coaching sessions. Now, my promise to you is this: by learning what I'm going to show you here today, you'll see how you can use technical indicators to help anticipate what is likely to happen in the future. And I really emphasize that word, anticipate. We're not here to predict. That's not the game that VectorVest is in. One of the main things I want you to understand is that speed is the key. Okay, the speed at which you find trades and then react. As a promise, I'm going to give you guys a copy of today's slides if you stick with me to the end. All right, it's kind of a thank you for sticking with me for the entire hour. Just somebody remind me. I usually forget. I have a lot of content that I cover here during the next hour. So right around 1 p.m. Eastern time, an hour from now, just somebody say, hey Jerry, don't forget to put the slides, and I'll insert those slides in the GoToMeeting section, GoToMeeting control panel, in the handout section. Okay, now I've got a lot to cover today. As I show you the techniques, if there's a tool that I use to help me, I'll show you that tool as well. If you don't have the tool, don't worry, I'll show you the alternative, and at the end I'll show you a way to get the tool for yourself if you want it. Now, the people I work with over the years, I've been with VectorVest now 13 years, wow, and I've worked with a lot of traders over the years, and a lot of them have let me know some of the problems they have when it comes to finding trades and just using technical analysis in general for trading. Number one, they feel like it's just a crapshoot, especially with the market being so up and down lately this year. Started off great, but the last 6, 7, 8 months have been pretty up and down, right? And with China and impeachment and everything that's going on, who knows what the market's going to do, okay? So that's what some of their concerns is. I have no idea what the market's going to do, and nobody really does. So I said earlier that we're not in the business of predicting. We're going to anticipate. We track trends. We follow the market. We use indicators that are consistent with that type of market action, and we just trade accordingly. Next, they say they don't have the knowledge. All right, they say they just don't feel they know everything when it comes to trading, so they just avoid it. They stick with their longer-term retirement, core holdings, fundamental valuation type positions, because they feel that there are too many technical indicators out there with all these funky names, so they just say forget it. Plus, when they do it, they spend so much time just looking at chart after chart after chart. I've spoken to people who go through hundreds of graphs in a day just to eventually find a handful of trades. Doing that too long leaves you very frustrated, as you can imagine. Really, figuratively, of course. I'm sure none of us are pulling our hair out, but very, very frustrated. So what we want to do is put the probability on our side. You don't want it to be a crapshoot anymore. You want to stack the deck in your favor. You want to know what you're doing, and while you might not know everything about everything, right? Every indicator out there, you'll know exactly what you need to know to be successful. Plus, you want to be able to find your trades quickly instead of looking at hundreds and hundreds and hundreds of charts and sometimes maybe not finding any. The thing that I've discovered is that there are 3 areas that traders need to focus on to be successful. The first is when. All right, so there are different types of market situations. If you guys have been with VectorVest for any amount of days, weeks, or months, you know that market direction is the single most important consideration that we want to make. Market environment. And there are different types of market situations, and you need to know when to use certain indicators. Granted, there will be special situations and times you might mix and match, and I'll talk about those situations, but we're going to talk about the main ones today that you need to know and what types of markets there are. Next is what? What are the indicators? Granted, again, there are dozens out there. But if you can focus on a few indicators at first, it's going to help you tremendously. And then third is how. How am I going to find my trades? Okay, I understand what the market's doing. That's first. Which indicator is best suited for that market? Great, I know that. Now, how am I going to find my trades? And there's a few different ways. There's the one-by-one method, right? That's where you look through chart after chart after chart. Then there are some faster ways, and I'll go through those as well. So with so many people doing shorter term trading now, algorithmic trading has kind of changed the game a little bit. It's important to be able to find your trades faster. That's why this webinar is called 3 Techniques to Help You Capture Trades of a Lifetime. So each section will have 3 areas, okay? But let me ask you guys first, what's been the most difficult part for you about finding stocks to trade? And I want you guys to use the chat box to answer. What's been the most difficult part for you about finding stocks to trade? What's been the most difficult part for you about finding stocks to trade? Gary says finding the time to search. There you go. Okay. Believe it or not, now Gary might be in a position or in a belief where it takes time, a lot of time, to find a handful of trades. Okay, I'm going to change that way of thinking, Gary, for you by the end of today. Jason says time to sell, when to sell. Michael says too many choices. Jay says avoiding profit report time. Anil says keep key top stocks. Okay, so the first thing you need to understand is when to use the indicators. There are 3 main types of market situations that we need to talk about. The market can do 3 main things. It can trend. Okay, we kind of all know what a trending market looks like, right? Higher highs, you're looking at the VVC, you're looking at the S&P, higher highs, higher lows, that's a nice uptrending market. Lower highs, lower lows, that's a nice downtrending market. Okay? Then there are times where the market doesn't do that anymore. It doesn't hit higher highs, nor does it hit lower lows. Kind of trades in a channel. That's known as a trader's market. It's an investor's nightmare, but it's very, very favorable for a trader. Then there are situations where markets hit extreme levels. December of 2018 was a really extremely oversold market situation. So first let's talk about it philosophically. Okay, so here's what a trending market looks like. This was pretty much all of 2017, first month of 2018. Higher high. This is the VectorVest composite, by the way. This is VectorVest's market index, market barometer. Similar to the S&P, similar to the Dow, the Nasdaq, the Russell. However, the VVC tracks almost 8,000 stocks, so it combines all of those indices in one. Higher highs, higher lows. Higher highs, higher lows. And you can see steadily rising. That's an uptrend. What our job is to take advantage of each subsequent higher low. We want to add to our portfolio. We want to add to existing positions or buy new ones after each subsequent higher low. Okay? We don't, however, take on short positions after each subsequent higher high and an eventual pullback. Why? Why don't we do that in an uptrend? Well, as you can see, those pullbacks in an uptrend as higher lows are being established are rather short-lived. Sure, there might be one or two where you might have been able to make money on the downturn shorting stocks, but we're not playing this game to kind of hope for that to happen, right? Or you know, see this pullback here and say, you know what, that was a pretty big one. I could have made money on the short side, so I'm going to go short after the next subsequent higher high. We want to, again, stack the probability in our favor, and probability is not on our side if we try to short stocks in an uptrend. Flip that over, and I know I don't have the chart of a downtrend, but the methodology in a downtrend is just the opposite. After each subsequent lower high, we take positions short. We don't look to buy the rallies. We don't look to buy those rallies because in a downtrend, those rallies are rather short-lived. Okay? So here we look to add to our positions at each subsequent high or low. We then look to protect our gains and take profits off the table after each subsequent higher high and eventual pullback, but we don't look to go short. Okay, so that's an uptrending market. That's the approach that you want to take in an uptrending market. Now here is end of January of 2018, all the way to about July, August of 2018. So we can clearly see that the market no longer hit higher highs, nor did it hit lower lows. It's known as a trading market or a trader's market. Essentially, again, no longer hitting higher highs, but we no longer are hitting lower lows as well. Market's moving sideways, trading in a channel. Essentially, it's bouncing back and forth between a support level and a resistance level. If you're a trader, you don't mind this, right? Because when the market hits support and retraces from it, that's going to be a buying opportunity for you. If it hits resistance and retraces from it, that's a selling opportunity. Investors don't think that way. They don't react to those types of technical situations. They're using looser stop criteria. They're fundamentally evaluating stocks to determine when to sell. They're not using, again, generally speaking, not using support and resistance to manage their core holdings portfolio or their retirement portfolio. Then the market, thirdly, will hit an extremely oversold or an extremely overbought situation. Back in December of 2018, we had just that situation. VectorVest the MTI and went below 0.60. The buy to sell ratio went below 0.20. When those indicators get to or below those levels, we know we're in an extremely oversold situation. We feel that a rally is rather imminent, and we have to be prepared to enter back into the market. And we saw that rally the day after Christmas, and then that was really the blast-off phase that started a really nice run. So we have to recognize when the market, and let me tell you folks, that those are buying opportunities of a lifetime. When the market is that oversold, okay, you really have to start thinking about entering back in. Again, if you're a trader, you really have to start thinking about entering back into the market when you see the blast-off occur. All right, what did you learn, notice, or want to share with the group so far? So we first talked about when, what the market can do. Sean says, is that market timing indicator? Where do I get that from? That's VectorVest. That's within the VectorVest program, within a market timing graph, Sean. If you need help with that, just give our support department a call. That's what the MTI is. That's in a market timing graph. What did you learn, notice, or want to share? I'll give you guys a few seconds to answer while I take a quick drink. Nobody learned anything, noticed anything, wanted to share anything from that segment? I'll give you guys a few more seconds. Maybe you knew all that information already. Maybe that's something that you were aware of. Okay. The next thing we have to talk about is after we learn how to recognize what the market is doing, we then have to apply the ideal indicator for that market situation. So for example, in a trending market, we feel that the ideal indicator to use in that type of an environment is the MACD. MACD stands for moving average, convergence, divergence, and the first two words in that indicator are moving average. Moving averages are trending indicators. They're technical indicators, they're trending indicators, so it would make sense to apply a trend-based indicator to a trending market. In a trader's market where we saw the market bouncing back and forth between support and resistance, right? It would make sense then to find stocks that are consistent with that type of market environment. And support and resistance is then applied to individual stocks. Okay? And then finally, in an extremely oversold market, and I've defined that for you, right? Where MTI is below 0.60, buy to sell ratio is below 0.20, we get the blast off, and the ideal indicator to use in that type of a market situation is the stochastics oscillator. That stochastics oscillator identifies overbought or oversold price situations on individual stocks. Okay? So here we have an example. Let's talk about the MACD first. We've got a chart here of Netflix. I added the MACD to the bottom of the chart. And the most common use for the MACD is to look for times when the histogram bars, that's these yellow bars at the bottom, go from below zero to above zero. That's considered bullish. Above zero to below zero, that's considered bearish. The MACD is based on a 12 and a 26 day exponential moving average. If you want to know the formula of the MACD or how it's calculated, you can go ahead and Google it. I'm not going to get into the formula of it, how it's calculated. What's important to me and what I feel is important for you is that you learn how to use the indicator. Okay, if you're an engineer, you can't help yourself, right? You want to know the formula, you can go ahead and Google it for sure. All right. So let's look at the times here. So first off, what type of a stock is this? Is this a stock that's uptrending? Is it trading? Or is it hitting oversold levels? Well, first thing I look at over this year time period is it's trending. It's hitting higher highs. It's hitting higher lows. It's in a trending environment. Okay, so we understand that first, right? So let's look at all the times when the MACD histogram bars go positive and ask ourselves, did we have a chance to make money? And I say, yes, we did here. We did have a chance to make money. We see here where the MACD histogram bars go positive again after being negative for a while there. New high was established. The stock broke down a little bit, but did it establish a lower low? No, it then stopped going down, started to go back up. This pivot point here is higher than this one, so we're looking at a higher low. And the MACD hit, just because the stock rallied here and formed a higher low doesn't mean that we're buying it. We're buying it because the MACD told us to. The histogram bars went from negative to positive, we buy. Did we have an opportunity to make money here? Absolutely. I'll talk about the negative crossovers in a moment, but let's talk about the bullish ones, right? We're talking about the buying opportunities. Okay? MACD histogram bars stayed negative for quite some time. The stock fell. Stopped going down, started to go back up. Where is this pivot? Is this pivot higher than this one? Yes, uptrend. Did we have a chance to make money here on this bullish crossover? Absolutely. How about here? Now I would say maybe that we broke even or maybe a small little loss on this one. Okay, so higher high, stopped going down, started to go back up, higher low. MACD histogram bars go from negative to positive. We buy. I would say maybe we walk away even on this trade. as with this one. Actually, no, I'm sorry, because the MACD histogram bars never went negative here. Here we have another situation. We got some higher highs that are being established, stopped going down here, established a higher low, another higher low. We got a nice uptrend. We get in, histogram bars turn positive, never turn negative during this time. Kind of move sideways a little bit, and that's going to happen, right? Not always are you going to enter into a trade and it just takes off right away, giving you immediate profit potential. Sometimes, you know, it'll break down a little bit, maybe it'll move sideways, and conventional, I wouldn't say it's conventional, but what I understand from a lot of traders and what they do is if they're not making money right away, and if price doesn't move in the direction that they want it to right away, they'll panic and exit. Okay? That's what indicators are for. Indicators are to stop us from doing that. Because here, as the stock kind of fell a little bit, we would have said, oh man, this is just dead money. This stock's not going anywhere. Maybe I got a small little loss. Maybe I'll cut my loss here. It's all emotional reactions. The indicator, the MACD, never told us to exit the trade. So we stay in and we realize all that profit potential. And here's another bullish crossover. Okay, so let's just go back to the bearish crossovers. Follow my mouse. So the bearish crossovers are opportunities to take gains off the table, to protect those gains, to take them off the table. Remember I said earlier, in an uptrending market, we're going to shy away from taking the market short in an uptrend, because generally speaking, the downtrends are shorter lived. And it's just a little bit harder to make money in a short position in an uptrending market while those pullbacks are shorter lived. Okay, so here is where another situation where we may have walked away with a small little loss or even. Here's you're still in an uptrend. Okay, Bert's asked a good question. Is the MACD a leading or a lagging indicator? Well, it's a lagging indicator. Why is it a lagging indicator? Well, moving averages are lagging indicators. Okay, I'm going to show you a few leading indicators in a moment, but the MACD is a lagging indicator because trends are lagging indicators, right? Okay, good question, but definitely a lagging indicator. You're not going to have a trending indicator that's going to be a leading indicator. Okay. Craig asks a good question. On the bearish crossover, do you sell all or part of your position? That's up to you. That's up to you. But Craig's on the right track. Is you do one or both of those things. You take action. That's up to you. If you want to sell half, great, let the rest run. If you want to sell it all, move on, take all those gains and invest it into the next trade, you can do that. But he's on the right track in saying do something, right? Take action. You can take half or all, that's up to you. Okay, so we're just looking at each bullish crossover here, and we can see that it's clearly giving us nice opportunities for profits. Now what happens, and I'm showing you this chart here because of the contrast in using the MACD to buy stocks during an uptrend, as opposed to trying to do that same thing when the stock's downtrending. Okay, so here we got, man, big pullback. Now we're starting to see a downtrend, right? We're no longer hitting higher highs, but now we're starting to get lower lows. We have the same bullish crossover here. We have the same bullish crossover here, so let's pay attention. So this one, we may have seen some gains, because I don't see that the MACD histogram bars turned negative until here. Okay? But did we have an opportunity to make money here? Same bullish crossover. Right? Now we're clearly in a downtrend. We're no longer in an uptrend. And if you think you're going to be the one to buy the bottom and then make 40% in a month, you know, I would kind of tend to disagree with you if you're in a downtrend. Now, it could happen. You're eventually there's going to be a bottom. But what we're trying to do, again, is put probability on our side. And buying stocks in a downtrend using a trend indicator is not a recipe for a high probability trade. So here are a couple of examples, a couple of bullish crossovers where it's very unlikely where we would have made money during that downtrend. Now here is that situation where you bought the bottom and you were able to make money. But again, we're trying to increase odds and you're not doing that. Okay? So in a trending market, favor using the MACD. Whether the market's uptrending, you're going to buy stocks on bullish MACD crossovers. If you're in a downtrending market, you're going to short stocks that are in downtrends on bearish MACD crossovers. The next indicator that we'll talk about is support and resistance. So now we're going to look at a market that is no longer trending, that is bouncing back and forth between support and resistance. We have to find an indicator or use an indicator that is best suited for that market, and lo and behold, we have one, and that's support and resistance. So this is a very, very popular trading technique, and one of the great things I love about the VectorVest tool is it has a way to automatically draw support and resistance lines for you on the chart. So let's take a look at what I'm talking about. Before we get too deep, let's talk about support and resistance. Support is the floor. It's a level at which stock prices have stopped going down and start going back up. Typically that happens on multiple occasions, and it's where demand is deemed strong enough to push the price higher, to support it from falling any further. Then you have resistance. That's the ceiling. Resistance is where stock prices have stopped going up and they start to come back down, typically multiple times. Resistance is where supply is deemed strong enough to push the price lower, to resist it from rising any further. And it's the ultimate crowd mentality indicator. Think about it this way. You buy a stock, right? You buy it somewhere here and you watch it go up. But you don't sell it. Why don't you sell it? Because you think it's going to continue to go up. You don't buy a stock because you think it's going to go down. You buy a stock because you think it's going to continue to go up. Then what happens? It comes crashing down. You don't sell it for the same reason that I said that you bought it, right? Because you think it's going to continue to go up. You don't sell it. It crashes and you say to yourself, my goodness, all right, I've weathered the storm. I'm going to sell it if it ever gets back up to that level again. Then what happens? It eventually gets back up to that level again, and what happens? All the people along with you who bought it back here the first time, they sell it. That puts tremendous pressure on the stock's price, downward pressure on the stock's price, and it typically will continue to fall. So let's talk about how you use support and resistance in your trading. Number one, price retraces from support, you buy. Again, price retraces from support, you buy. Not just because price hits support, but if price retraces from support, you buy. Number two, price breaks resistance to the upside, you buy. Not just because price gets to that resistance level. That's not when we buy. We buy on a breakout above resistance. Those are the two buying opportunities. The two selling opportunities or two shorting opportunities are as follows. Number one, price retraces from resistance. Price retraces from resistance. We could initiate a short position or sell our long position. Or if price breaks down through support. Those are the two selling opportunities or shorting opportunities. Okay? And the third indicator is stochastics. So now, kind of backtrack. We've recognized that the market is in a trader's market. It's not hitting, the market's not hitting higher highs, it's not hitting lower lows, it's trading in a channel. We know that the MACD is likely to fail us in that type of a market environment. If the market's not trending, why would a trend indicator work on stocks, right? It generally doesn't. So we use support and resistance in that type of an environment. Now we're getting into a situation where the market hits extremely oversold levels. Okay? MTI goes below 0.6. Buy to sell ratio goes below 0.2. We then see the blast off phase. We want to find stocks that are exhibiting that type of behavior, coming out of an oversold situation. Stochastics is a great indicator for that. As with other oscillators, it helps to pinpoint overbought and oversold conditions. Again, you want to know the calculation of stochastics, please Google it. You'll get all you need to know. And don't let all the squiggly lines here confuse you. It's not confusing. Stochastics oscillates above and below, it oscillates between 0 and 100. Below 20 is considered oversold. Above 80 is considered overbought. I'm only going to focus on the buying opportunities, the oversold opportunities, when stochastics is below 20. Now, would you agree that when the stochastics oscillator goes below 20, that we're near a buying point, right? We're near a buying opportunity. I know this stock is in an uptrend, right? And that's fine. But believe it or not, stocks in uptrends can be considered oversold. It may not look that way just looking at price, but that's why we just don't look at price. We don't just look at price. We use indicators to confirm price behavior. So even though the stock's in an uptrend and these little pullbacks here don't seem too extreme, they are according to the stochastics indicator. And those are all good buying opportunities. Just because stochastics goes below 20 doesn't mean we buy. Just because the stock's price hits support doesn't mean we buy. Those are called setups. Okay, a setup is a condition or conditions that kind of get you ready to enter the trade. In this case, the trigger, or what's telling you to actually take the trade, is when stochastics goes from below 20 to above 20. So somebody was asking earlier, I think it was Bert, was asking about leading or lagging indicators. Stochastics is a leading indicator. Okay, you could see how early it got us in. 2 days off of the bottom. Okay, here was another bullish crossover. A few days off of the higher low. Same thing here. We're looking at maybe 1, 2, 3 days or so off of the new higher low. Stochastics goes below 20. We are getting ready. We're not entering yet. We wait for the stock to stop going down, start going back up. And when stochastics goes from below 20 to above 20, we buy. Just a couple of days off of the low here as well. All good buying opportunities. Sean is asking, is it an idea to combine MACD and stochastics? Not ideal, no, Sean. The ideal, and I was just about to get there, the ideal combination, and what I said earlier is there are times where you can mix and match. Let's just stay consistent with MACD in a trending market. The mixing and matching comes in with stochastics and support and resistance. You can mix and match stochastics and support and resistance. And let me kind of give you an example of doing that. So here with Abbott Labs, right? Here's a really oversold situation, right? Price, man, crashed for a couple of weeks there. Stochastics went below 20, crosses above 20, and we buy. Gives us a really nice profit potential. So where would be a good opportunity to take our gain off the table? Well, what I like to do is I like to start thinking about taking my gain off the table once price reaches the most recent swing high. Price reached the most recent swing high and then pulled back. It did not make a new high. So when price stops at the same level that it stopped before, what is that called? That's called resistance, right? So when price breaks down and does not establish a new high and retraces essentially from the most recent high, I'm going to think about start taking my gain off the table. Again, you have those two choices. You can take half off, let the rest run. You can take the whole position off. That's up to you. But now price pulls back and establishes resistance. Okay, so we get out. We see a very prolonged pullback. Stochastics goes below 20 again. Where does the stock's price stop going down? It stops going down at essentially the same level that it's stopped going down back here. What is that now called? That's called support. So here's the mixing and matching. You have both situations occurring. You have a retracement off of support and stochastics going from below 20 to above 20. That's a buying opportunity. Then what happens after we get in? Well, boy, the stock crashed. See that big red candle there? It crashes. And what are we thinking? Well, we're panicking, right? I hope moving forward you do less and less panicking, because there's no need to panic. You got into a trade, the stock crashes there for a day, but we know now what we have. We know we have a level of support here. So what do we know? We know that if a trade that we're in, if price breaks down through support, we know to sell it. Not just when it hits support, when it breaks down through support. Did it break down through support on that big down day? No, it did not. And then what happened? All right, we got another support retracement. Good. So we're still in the trade, by the way. We didn't get out just because the stock went down quite significantly on that day. We stayed in because it didn't break down through support. It retraced from support. Now we breathe a sigh of relief because we think we're in the clear. Then what happens? Okay, the stock falls again, right? Now, if you didn't get out of it, you're wondering what to do. You're saying to yourself, all right, well, it's falling back. Now it's a little bit below my purchase price, but it's once again retesting that support level. And you're saying to yourself, okay, I remember what Jerry taught us. Excuse me. He said that if a trade that we're in, if price breaks down through support, I should sell it. Not just because it hits support. Okay? What did the stock price do? It hits support again and then retraces from it. Now we got a nice profit underway. We now know that there is a resistance level right at about 64 bucks. That's going to be where we start to think about taking our gain off the table. And what happens? Price reaches that level on a dime and stops and turns around. And that's our exit right there. Question is, do you consider stochastics to be a more reliable indicator than the MACD? They're just two different indicators. I can't say which one is more reliable. If you apply them correctly, I think maybe they're both equally reliable. Because if you apply the MACD to a stock that looks like this, you're going to likely fail more times than you win, making it not as reliable. But if you apply the MACD to an uptrending stock, you're likely to win more than you lose. So again, we're looking at another buying opportunity here. There was our exit. Stochastics falls below 20, crosses above 20. We're always able to get back in. And here's where I'm going to be very transparent. So here I buy the stock on the bullish stochastics crossover, and I know I have a really established strong resistance level. So what happens? The stock price here reaches that resistance level, and see that big red bar? It retraces from it. I'm out of the trade. I'm telling you that I'm getting out of the trade, even though I have the luxury of seeing what happens afterwards, and I could easily say to you, I would have stayed in this trade the whole time. I wouldn't say that to you. I'm telling you to follow rules, and the rules are, if you're in a trade and it retraces from resistance, and boy is that a resistance retracement, you are to exit the trade. All right, you exit again, but you made money. You exit at a win. Stock price breaks out through resistance. When that happens, that resistance level becomes support, and you can see a retest of that support level, a retracement off support, once again a retest of that support level. That retest coincided with stochastics going below 20. So here's again mixing and matching, right? Stochastics goes below 20. Not only do you have that happening and eventually going above 20, you have a support retracement. There's your entry. Not every trade is going to be a winner, okay? But if you follow the rules, you're likely to win more times than you lose. In this case, here you have a stochastics crossing above 20. You also have a support retracement. One touch, one retracement, two touches, two retracements, three touches, your third retracement, with stochastics going from below 20 to above 20. You're in the trade but a couple of days, and then the stock crashes for 2 days. You know that you have a nice support there, a nice floor that will protect you. If the stock price breaks down through that floor, you're out. It doesn't, and you can see that you're able to stay in the trade for a gain. All right. What kind of information, what kind of impact can this have? Can this information help you folks in your trading? Think about what you've been doing, maybe the trials and failures that you go through. Can this information help you in your trading? That's more of a rhetorical question because I know it can. Michael says definitely. Okay. And even if you aren't a day trader. No, wow, awesome. Walker says, Jerry, this is great information and help for me. Thank you. You're welcome. All right, now the really the important part. Here's the time saver. You know what the market is doing. Trending, trading, or hitting extreme levels. Once you understand that, you are now applying the appropriate indicator or indicators. You know, in a trader's market or an extreme market, you can use support and resistance and or stochastics. I wouldn't use MACD because, again, it's really more for a trending market. You now know the indicator that you want to use. Okay, well, how am I going to find my trades? How am I going to find my trades? There are three main ways. There's the one-by-one method. That's where you put, that's where you look at stock after stock after stock. So, for example, I'm not going to do it because it just takes so long. For an example, you're in a trending market. Okay? You know that you're going to look for MACD crossovers, bullish MACD crossovers. You go through the S&P 500 watch list, and you go through every chart to look for a MACD crossover today. I don't know how long it's going to take you to find a handful. I just don't. Could take 5 minutes, could take 2 hours. I don't know. Okay, so that's the one-by-one method. Then there's using a scan or a search that filters through a certain list of stocks to find stocks that meet the criteria that you're looking for. And then finally, there's automatic alerts. So again, using the one-by-one method, you look at the S&P 500 watch list. Depending on the market situation that you're in, will determine which indicator you're looking for. If you're in a market, for example, that the VVC has just retraced from support, and you want to find stocks in the S&P 500 that have also just retraced from their own individual support level, you would go through the list, put support and resistance on. Excuse me. Excuse me. You put support and resistance on, and you'd find stocks. You'd look for stocks who today, on the most recent date, their price is retracing from support. Again, I have no idea how long that would take you. Then there's using a search. And within the VectorVest real-time program, we have a tool called Pro Trader. It's included with the VectorVest real-time program. Pro Trader allows you to search for, scan for things like moving average crossovers, MACD, support and resistance, okay, stochastics. All of the situations that I talked about today, all of the triggers, all of the situations that tell you to buy the stock, you can scan for it within the real-time program. Then we also have a tool within the real-time program called a watchdog. This is your automatic real-time intraday alerting system. So as an example here, I have a lot of watchdogs running all the time, and this particular watchdog I have running looks for a bullish MACD crossover on S&P 500 stocks. And on September 3rd, a couple of months ago, at 8 a.m. Eastern Time. Now that's before the market opens, of course, but before the market even opened on September 3rd, I got an alert that PRGO had a MACD bullish crossover. It gave me a price, $46.78. Okay? There it is. There is my bullish crossover. Notice you can see the MACD histogram bars. Were they bullish or bearish or negative? Were they positive or negative during the month of August into the month of September? They were below zero, right? They were bearish. Then all of a sudden, during the day, pre-market actually on September 3rd, you had a bullish MACD crossover. And it gives us a price of 46.78. You can trade pre-market if you wanted to. You can wait for the after the market opens, and you could see that led to a nice profit. Same day, September 3rd. Now this at 9 o'clock. I got another alert. Alaska Air had also a MACD bullish crossover. Here's Alaska Air. There's my MACD crossover. There's the negative MACD for a long time there. There's my bullish crossover. That happened during the day at a price of 59.72. You could see that was a nice opportunity for gains there as well. Okay? All right. You showed up today because maybe you feel like you're missing out on the current market. I've had a decent run here. I don't know what the market's doing today. Let me actually take a quick peek. What's the market doing? Oof. Market's down quite a bit today. Dow's down 250, NASDAQ 43, S&P is down about 21 points. And let me show you guys something really cool. I'm going to go into a market timing graph. This is within VectorVest now, and I'm going to go to a 1-year chart. Actually, I'll go to a 6-month chart. What is the market doing today? It's falling, right? But more than that, what is it doing today? Think about what we talked about earlier. Is the market trending? Is the market trending? Yes, Craig, nice job. The answer is no, the market's not trending. Why? This is not a higher high than that. These aren't lower lows, though. And then what do we have here? We have a market that's failing once again to hit a new high, and Craig nailed it. Retracing from resistance. Retracing from resistance. So it's clear, guys, what the market's doing right now. It's retracing from resistance. So I would not use the MACD. I would either search for stocks that are retracing from resistance. I'd use the Pro Trader tool within the real-time program to do that. Or I can look for stocks whose stochastics is crossing from above 80 to below 80 if I'm looking to short. I'm not looking to buy anything right now. I'm looking to short. If I'm a trader and I see the market behaving this way, I'm not saying if you're an investor. If you're an investor, you're not shorting. If you're a trader and looking, primarily from a technical perspective, you're going to look to protect your gains that you've accumulated during this rally, and you're going to maybe look to go short. Small, right? It's early. I'm not saying throw every dollar you have in your trading account to 10 short positions, but you can hedge. You can take on a few short positions because you got a nice retracement off of resistance. Okay, so maybe you before today weren't aware of that, of how to kind of maneuver through the different types of markets. So you're missing out. Your current trading plan that you've been using isn't performing like you want it to, and you just want a better, faster way to find your trades. So what did you learn today? I always say I'm going to reverse this one here. It says match the market to your indicator. I always say I'm going to reverse it because I'd rather say match the indicator to the market. You got to recognize what the market's doing first, then figure out which indicator you're going to use. So that's one of the things you learned today. You also learned how to effectively use popular technical indicators. And then there are quick and easy ways to find trades. You don't have to do it the one-by-one method. You can, guys. Don't get me wrong, you can, but there are quicker ways to do it. And so the big lesson, technical analysis can help anticipate future direction. There's that word anticipate again, not predict. And you can find great trading opportunities, especially if you use the power of speed. And that's one of the main takeaways I wanted you guys to take away from today, is speed. How quickly you can find your trades and react. A lot of you guys are chiming in actually and asking, this is fantastic. Where do I start? You have a choice. You can go the slow way, which is the one-by-one method. Okay? That's where you look at the charts, you put the indicator on the chart, you see whether the MACD, for example, or let's just use the current market, you see whether price is retracing from resistance. If it is, that's a potential shorting candidate. That's the slow way, or you could do it the fast way. Okay, using scans and alerting systems. So here's a recap. What we're offering to you folks today is our VectorVest real-time program. It includes fundamental and technical charting, market timing signals for clear entries, those pro trader searches. That's a big part of the real-time program. That's where you are able to scan for crossovers, MACD, stochastics, support and resistance situations. Gives you the watchdog, which gives you instant real-time alerts either through email or text message. VectorVest Real-Time includes the Genius, which is an automated real-time portfolio manager. Gives you alerts as well. Also gives you pre-built trading systems and, of course, real-time streaming data. Now, normally if you want to buy this on its own, we would sell it to you for $137 per month. All of this included is worth well more than $137 per month. But here's your special offer for you folks who are joining me today or watching this recording, and you all will get the recording. Special offer is $9.95 for everything that I just talked about, and you get to try it for 30 days. Okay? Go to that website at the bottom. And Ray, by the way, Ray has been Ray Clark has been the one answering your questions. I want to thank Ray for being here. He has typed that address, the address that you see at the bottom there, vectorvest.com/capture-trades. It's in your chat box. Click on it. Go to that website. You can try out VectorVest Real Time for 30 days for $9.95. Okay? Here's an extra bonus. I'm going to include this checklist. It's a trading plan checklist. This is great for those of you who like to be more hands-on with your trades. The checklist will help make sure that each trade you do follows all the rules that we discussed today. Okay, so this is a special bonus. This offer, this 30-day trial to real time for $9.95 is only available until Tuesday. Tuesday at 10 a.m. Okay? Also, this is a 30-day money-back guarantee. I don't think you're going to need this, but if for some reason you don't like it during your 30 days, just let us know. We'll give you your $9.95 back. You're not contractually obligated to stay. But go to that website, vectorvest.com/capture-trades, for the special offer. I'm going to stick around for a few more minutes, guys, answer some questions. If you're saying, you know what, this is a no-brainer, I learned some good information today, I want to apply it, just type in, I'm in. I'm in the chat box. I'd like to welcome you aboard. And for those of you who do sign up for the real-time program, my email address is jerryd, that's Jerry, D as in David, at vectorvest.com. jerryd@vectorvest.com. Anad says I'm in. James says I'm in. All right, so as far as what happens after the trial. After the trial, Walker says no brainer, I'm in. After the trial, it will automatically convert into a monthly subscription for $137 per month. If you do not wish to continue, just give us a call. We'll turn it off. Again, you're not contractually obligated. Now, if at the end of 30 days you say, my goodness, great program, I've made money with this, I can see how it's going to work for me, and you want to continue, but you don't want to pay $137 per month, which is 137 times 12 is $1,664. We can convert your trial into an annual subscription for $12.95. Okay, $1,295. So you save a bit of money, but let's just focus on the first 30 days first, and then you can decide what you want to do after that. Okay. James says, how do you get the watchdog? It's included in the real-time program. So once you sign up for the real-time program, you'll see the watchdog within the tool. And James is asking, where do we get the checklist? That will be emailed to you once you sign up for this trial. Bernier says, I'm already in the end of day for a year. How does that affect? Fill out the order. Go to that website, click on the link, fill out the link, and we'll switch your account to real time for this 30 days. Okay, so we'll charge you $9.95 for 30 days. You try out real time. If you want to continue with real time, then you can do that. However much money you have left on your end of day will be credited to your account if you want to continue with real time. If you don't want to continue with real time, you just go back to your end of day subscription. Tom's asking, what VectorVest class teaches more of this? All right. We have swing trading courses. Now, more of this in particular, we don't really touch much on the MACD. We have courses and techniques that do use stochastics, but Tom, we have swing trading courses. For example, coming up with the next couple of weeks, actually tomorrow, you'll see on our website and within the VectorVest views a course called Trade Like a Pro. We teach you different professional traders techniques. Some of them use RSI, some of them use ADX, some of them use moving averages, some of them use RSI, a few different types of indicators. Okay, and they've developed trading systems, trading techniques, when to buy, when to sell, when to take gains around those indicators. So that's the next class that we have coming up. Give our product support anytime for questions on that. But that's going to be available starting tomorrow, Tom. It's called Trade Like a Pro. You'll see that in the views. You'll see that on our website. If you want more information, just give our support department a call. I got a few I'm-ins. James, Anad. Let's see. Did Craig say? Not yet. Booker says I'm in. Welcome aboard, guys. Look, again, my email address is jerryd, J-E-R-R-Y, D as in David, at VectorVest.com. If you sign up for real time, you have any more questions, shoot me an email. Dave says, will this webinar be offered as a replay? Yes, you'll get the replay within about an hour, guys. You'll have until early next week to view it. It will no longer be available mid next week, so you'll have plenty of time this weekend and early next week to watch it again and again and again. Take notes if you want to do that. I think that'll help. Oh, the slides. Nobody reminded me. Somebody usually does remind me. In the handout section of the GoToMeeting control panel, I'm going to put today's slides. In a second, you're going to see a PDF in there called 3 Techniques, and it should be in there now. You should see it in your handout section of your GoToMeeting control panel. Okay. All right, guys. Any other questions before I wrap up? Again, www.vectorvest.com/capture-trades. I'll keep that up there for a little while. $9.95 for 30 days. If you're not a VectorVest subscriber, welcome aboard. You get to try out the software for 30 days for $10. If you're already a VectorVest subscriber, you have end of day or intraday. There's no harm in giving the real-time program a try. I went through all the tools that it includes. You just get a lot more for your money, more bells and whistles with the real-time program. Again, you get to evaluate it for 30 days for only $10. All right, folks. Well, happy Halloween, everybody. Stay safe out there. I will see everybody again on our next webinar. Again, my name is Jerry D'Ambrosio. Aubrey, if you have any issues, the slide link is not working. Let me just confirm that it is. It is working. If it's not working on your computer, shoot me an email at jerryd@vectorvest.com, and I will email you the PDF. Okay? Have a great day, everybody. We'll see everybody again soon. Take care, folks.